What's going on YouTube? Were you thinking about investing in an ETF? Maybe the S&P 500? Well, look no further because I have some ETFs that will help you invest into the S&P 500. There are ETFs that have 30 stocks or businesses in it, and then there's some that have 10,000 or 9,000, like VT. VT has around 9,000 companies in it. So today I'm looking at just the S&P 500. Okay, so SPY and then SPLG. Okay, so I've always thought about SPY whenever I was thinking about investing in the S&P 500. I did invest a little bit in the SPY. Well, SPY has a 0.09. Drop my pen. It would mean so much to me if you liked and subscribed to this channel. Enjoy the video. SPY has about a 0.09% expense ratio, and that is pretty much low compared to like mutual funds and stuff. But I found a better ETF made by Spider as well, SPDR, and that would be SPLG. Alright, so I didn't hear about this company yet until like today. I was looking into other SPDR ETFs. So this one's called SPDR Portfolio S&P 500 ETF. It tracks the market cap weighted index of 500 large and mid cap US companies selected by the S&P committee. Okay, so this one has about 508 holdings. In SPY, which is also the S&P 500 ETF trust, has about 507 holdings. Alright, so the difference between SPLG and SPY, well, one is that SPLG has a 0.03% expense ratio, which is like 0.6 less than SPY, because SPY has a 0.09, SPLG 0.03, and you're investing in the same exact thing. But if you take a deeper look at how is it performing, well, if you take a look at SPLG, the 1 year performed slightly better than SPY. Okay, so the 1 year for SPY was 28.75%, and SPLG 28.78%. So it's like 0.02 or 0.03 higher than SPY, which isn't much of a difference. But if you think about it in net expense ratio, not only is it cheaper to hold this ETF, but it also had more of a gain. Okay, so you save more money using SPLG, and you made more money. Now, if you were to have SPY, you would have paid more in expense ratio, and you wouldn't have made as much of a return in the last year. So both companies are pretty much the same thing, and it has the exact same top 10 holdings. So what I love about Fidelity is that you can click view 507 holdings. Okay, so and now you can see every single holding that the SPY has, SPY. And then you can go over to SPLG, click their holdings. They have one more company in theirs than SPY does. So if you take a look, pretty much the exact same companies with a different amount of weight on the portfolios. Because like if you look, you know, instead of 6.84 in Apple, SPLG has 6.85. So not much of a difference, and it seems to have it better, so on SPLG, of course. So if you look down, you know, they might be in different orders, like once you get so far down to like, let me see. Alright, here, Coca-Cola Holdings. Coca-Cola Holdings is below Comcast on SPLG, but on SPY it is above Comcast. So like, you know, some of the companies are a little below than the others, but like they're just switched around a little bit. Doesn't really make much of a difference. Okay, the only big difference here is the price that you're paying for the ETF. And I personally would pick SPLG. Now let's look at another S&P 500 company. This is none other than VU, the Vanguard 500 Index Fund, which has 510 holdings. So the S&P 500 VU has a net expense ratio of just 0.03%, just like SPLG. Now, so the 1 year is exactly the same of a return as SPLG. So far, SPY is just losing, Screw SPY, kick SPY out of here. That is not a good, well, it is a good fund. I'm not going to say it's a bad fund, but it's a little more expensive, so why get it, And then there's one more S&P 500 stock index fund that I think is worth looking into. Now, this is just the Fidelity one. So it has a smaller price tag, but that doesn't make any difference in the ETF. Okay, now just remember, the price tag isn't the return, Like, you can buy this and you're still going to get a 28.69% return in the year. So the Fidelity 500 Index Fund got about 28.69%, where SPLG got 28.78%. Okay, so obviously that SPLG is doing a little bit better. However, the FXAIX S&P 500 fund has an expense ratio of 0.015. So that is half the expense ratio of SPLG and half the expense ratio of VU. And it has 508 holdings, kind of like SPLG. Okay, so it pretty much, all these stocks, all these ETFs just mimic each other. They have different expense ratios and different price tags. So the Fidelity S&P 500 is something I do have in my portfolio on Fidelity. It does have a good expense ratio. That's what I like about the Fidelity index funds. Well, it's not an ETF, it's an index fund. Okay, so whenever you buy FXAIX, it doesn't go through until the end of the day. That's the difference between an ETF and an index fund. So an index fund is the exact same thing as an ETF, pretty much, but you can buy an ETF instantly, like a stock. But an index fund, you have to wait till the end of the trading day to buy the fund. You buy it when the market opens, you gotta wait till the market closes for you to buy it. But I think it's doing pretty well. Just like everything else, it's down year to date. Now, here are some extra index funds that are not just the S&P 500. There are more than the S&P 500. There are more holdings and or less holdings. One other company by Fidelity that I like is FZ Rocks. So it's the Total Market Index Fund. So it has average to high returns. The 1 year is 26%, a little bit lower than FXAIX, which has a 28% return. But the thing about FZ Rocks is it has a 0% expense ratio, so you don't have to pay any expense ratio. And it costs $15.47 for one share. It's an index fund, so you gotta wait till the end of the day to buy it. I want to see their diversification. Domestic equities, 99.97%. International equities, 0.01%. Okay, so pretty much all of it is in the United States, and in other countries is 0.01%. So I don't really see how that's like a total market index fund, but I guess it could be the total United States market, right? But I think it means more like maybe the total sectors of the stock market. So it is in every sector on the stock market, almost everyone, other than other. I don't know what the others are, but I don't want to look into that right now. But I mean, if you do want to look into that, that's good too. I do have this stock in my portfolio because I like it, and it's cool. It's a cool stock to have, or an ETF index fund, whatever. It's a good index fund. So it has 2,631 holdings, and it's a lot of holdings. So, like, you got a broad amount of holdings. So, I mean, it'll be pretty stable, you could say. Unlike buying individual stocks, I guess. what's the other one? SPY-G. Okay, so SPY-G is a growth index ETF. So it's a growth ETF. It has a 0.04% expense ratio. It does very good whenever there's growth, but when the growth stocks are dropping, it does very poorly. Like, it freaking drops. Yeah, so you can see it went from 70, yeah, all the way down to 63. So let me see here. See, like, I wish it showed like the percentages and stuff. So year to date, SPY-G is down 11%. So it is a lot more down than other ETFs like SPY, for example. SPY is only down 7.49% on the year. FXAIX is down 7.53%, and VU is down 7.51%. So all the S&P 500 index funds and ETFs are pretty much all exactly the same. It just depends on what company you want to go to, and if it is the same company like SPY and SPLG, it could have a different expense ratio than the other one. So I would choose the best performing, cheapest ETF you can get. I would go with SPLG, or wait, what is it? It would be SPLG, and you could feel better about getting in there because it's $51 a share right now, and it is a very good ETF. I think that I will be investing in this. I think I'm going to put it into my Roth IRA, actually, because I think that it is a very good ETF. And also, I like VT. VT is the total world index because it's pretty much diversified, a little over 50% in the US market, and the rest are international. So this ETF will hold you up whenever the United States isn't doing that great, you know. So when the United States is tanking, the internationals can hold you up pretty well. It's pretty much 62% in North America, 17% in Europe, 16.5% in Asia, and a little bit of in the rest, the Latin America, the Middle East, the Africa. So over here you can see it's 59% in the United States and 6.15% in Japan, United Kingdom, China. Even though this stock also just tanked, so I guess it would be a good time to get in, right? But it also seems to have a lower return, but it's more of like a I'm gonna keep you safe kind of ETF asset. It has 9,407 holdings. VT is one of the best world market index funds. I think that's all for today. Is there anything else I missed? I'm sure I did miss other S&P 500 ETFs. There are a lot of S&P 500 ETFs for just the S&P 500. And then there are thousands of different ETFs as well, like commodity ETFs, energy ETFs, real estate ETFs. So I will be going over that. And if you subscribe and like and leave a comment down below on what else you want to hear, I can talk about that as well. And I'm going to try and go through all the ETFs and all the commodities and just compare all of them like I did in this video. So have a great night, and thanks for watching. Jake Unfiltered. Like and subscribe. Out.